Hey guys, and welcome back to the channel. Now, the markets have gone into new all-time highs overnight. Bitcoin has hit a new fresh price of nearly $64,000, which is getting extremely close to our overbalance in price and time targets above 65K. Now, as the title suggests, we are in a blow-off top stage. It's essentially the winner's curse phase. So I want to talk about that in today's video, along with a few narratives that the markets are potentially looking at as we continue to build this momentum into the final leg of the 18.6-year cycle. Don't go anywhere. Hit the like button, subscribe to the channel if you're new here. It's your home of macro cycle analysis. I'm covering Bitcoin, a few cryptos today, and cryptos in general, the stock markets and global stock markets around the world, and the real estate cycle. I'm putting it all together and delivering it as best as possible to hopefully forecast the future as best as we can here on the channel. Now, if you want to stay connected with more information about the 18.6-year cycle, Bitcoin, real estate, and cryptos, the link in the top of the video description is for our free crypto and economic report. All right, guys, let's kick it off with a few of the narratives that I'm seeing as the markets continue into their winner's curse phase, this blow-off top move before an inevitable correction, major correction coming up. Well, we've obviously seen the US dollar price go down, and from what I can see anyway, we're getting asset prices go up. At least that's the narrative. It's obvious the asset prices are going up, but I think we're going to continue to see that narrative build as a reason why the markets keep going up. I still see bearish people, those folks who've been bearish for years, continue to call out why the market has to drop. And it hasn't happened. It hasn't happened for months and years, and they'll continue to be wrong and hope for this correction. So that's what I've got down here. What should you do and not do? In these phases, it is critical to not get swept up in the fear porn. So avoid the fear porn. Pretty simple, but difficult to do because how crazy these markets seem. And I'll show you that specifically on the chart, how stupid the moves to the upside can get. There's no guarantees, but we are building to one of these sorts of positions, right? Number two, interest rates are down. Asset prices, at least in the short term now, have bounced back and into new all-time highs, at least for now. Eventually, interest rates will potentially have to continue down, and that's when you start to see a bit of a correction. But in the short term, it's not going to make any difference to this winner's curse phase. Well, the difference is that the asset prices are going up and people are getting left behind, which then fuels more movement to the upside. We've got cheaper money, so more cheaper money to speculate in the markets. And the economy is weakening. Not new, it's not a new narrative, but it's also not true at this moment. However, it will be, and the economy will eventually weaken. I know some people say that it is weakening now, but the stock markets are what we trade, and the smart money is suggesting we're going to see further upside, higher prices. Now, I wanted to show you this on the Australian stock market from the previous cycle, just as an example of how stupid things can get, because we're in a, well, the pattern can be similar. It's not going to repeat exactly the same, but if we have a bit of an idea of, again, how crazy some of these prices can go up, you can really start to see that it's not that far-fetched. Now, I'm not saying that you have to hang on for these extreme moves. Take profits as best as you can, which comes in to number two. We talked about that yesterday, take profits, right? And then the third thing was offense versus defense, which I went through in great detail in yesterday's video, and you guys found some pretty decent value from that. Offense versus defense means it's good to be offensive when the markets are down in a macro bull. That's offensive, throwing your money into the market. You know, you're getting out there playing the game. Defensive is when this shit goes ballistic. That's the blow off top. So the Aussie market, just as a quick look here, right? This is an example of it. Tops in 2002. We had that top in late or early 2022. Remember, it's almost like an exact 20-year cycle. The market went down. This is a weekly chart, remember. Each of these one bars is not 1 minute. This is literally living through 168 hours of life, each of these bars. So it's a very long time for most people. Market went down for many, many, many weeks. Into March 2003, we had a low in March 2023 as well. You got some lows here in October. The 2022 low was in October as well. So a very similar pattern. Higher low here in May. We had the US debt ceiling crisis in May 2023, another higher low. The market's continued on. There's a bit of a correction here in October. Come 2024, the market starts to break out into these highs. Now, of course, this is the Aussie market. The US market also had a similar pattern through 2002 as well. It didn't break to a new all-time high, but that's for another day. What I'm looking at here is the ridiculous pattern. 2004, markets up in September, October, November, December. The main thing here is not to look at any sort of exact percentage gains, but just have a look at how the year progressed. 2004 started around here and it ended around here. So pretty decent move up. 2005 came. That is a very significant correction for the time. You're going to see some extreme volatility. 8% to the downside. We had that a little more, around 10% for the Japanese yen carry trade. You remember in August how ridiculous people got and how the recession calls came out again, that the world has to implode and this is the end. You wait till quarter 4 2024, the markets are going to explode and things are going to go down. Didn't happen, right? So what I'm trying to give you here is try to express how fearful things can get for a matter of 1, 2, 3, 4, 5, 6, 7 weeks. So nearly 2 months. Well, you would feel like shit for more than 2 months, because as the market comes back out to a new all-time high, you're thinking, why didn't it collapse then? It should have collapsed. 2025, I think, is going to be another very, very significant year. This is 1 week at a time through 2005. You can see the market run up. The year ended around here at 4,700 points, all the way from 4,000. So nearly a 20% move in that year. And then 2006 happens, continues up, and very significant correction here. And then it keeps going into 2007. And we all know what happened in 2007. We've got the peak. You can just see week after week after week, it is up. And it doesn't feel like, well, as you get towards the end, it doesn't feel like this thing is going to collapse. That's when you need to start getting a little bit worried, but not too early. I read a few comments yesterday, people thinking, everyone's so bullish now, it has to turn. It's important to note that for a period of time, the masses are right and everyone is right. The whole market is going up. That is the winner's curse phase. So before I get onto that, just show you what that is in the 18-year cycle. When you are looking at this day to day, hour to hour, it just looks like a normal chart. The chart's going up. You've got this very decent correction and then finally the peak here, right? But when you zoom out and look at what happened over that entire period, it's absolutely phenomenal to see it go from 2003 into 2007, more than a doubling here. So the low to the top here, 152%. Very, very big move for the Aussie market, and a few other markets around the world did that in the end of the real estate cycle last cycle. So what is it that I'm talking about? Well, here it is. The winner's curse phase, 2 years roughly for this winner's curse phase. And I've pointed out before, we're in here. So if you're trying to figure out whether we're here or here or here, it's a bit of a subjective look at the moment because it's broadly speaking around 2 years. There's not really any particular signal to say that you're at the exact start or the exact middle or the exact end. You'll start to see more signs of those things. And right now, I pointed out, I think we're in the first half of the winner's curse phase. So that first year, we're probably not in that second year yet. And that will come 2025 into 2026. Apologies about the voice. I was at the boxing last night. Eric did a fantastic job. Eric Crown was Crypto Cave on YouTube. I'll show a few photos of that later. But essentially, my voice is gone from cheering him on, winning that boxing match. Moving on. This is the current cycle of the 18-year cycle. We are actually around here. I bring this one up because I posted it in February 2024. And to give you a bit of a look at February 2024, this was the day here. This is where we currently are at a new all-time high. You can see the percentage gain is roughly around 13% over that period, with a very severe Middle Eastern conflict, another very, very, very important, severe recession type talks of a Japanese yen carry trade, yada yada. Same thing over and over again. There's all these big events that are telling us the market needs to collapse. We are in this phase. So I'm trying to explain here what happens in these cycles, how these narratives build through the end stages. And then when people believe that we got through interest rates dropping, maybe the economy's not working, basically when we get through all of these narratives, now everyone starts to believe there is no chance of the market going down because the Fed did it. They did a soft landing. They did a whatever. that's when you start to get a little bit scared. And you'll start to hear some of the maybe presidents or big business names tell us that the markets are extremely healthy and that prices are going to continue up. This happened January 2020, before the COVID crash. Trump got up and talked about how healthy the markets were and that they had the strongest economies in the world at the the meeting that they do in January for the US, right? They talked about it at that time. Extreme positivity, bam, COVID happens. The whole point about this is not trying to predict what they're going to say, but it's these sort of signals that you see towards the peaks when everyone's excited. It's the same thing, for example, at a Bitcoin top, Bitcoin in March 2024 this year, right? And Bitcoin's at 70 grand, and then you hear Kathy Wood say it's going to $1.5 million. And you hear Michael Saylor say, I've just bought another billion worth of Bitcoin. Then you hear all of the same crap at those peaks. That's the thing to look out for. That's one of the ringing bells saying it could be time. And it's probably more wise to go on the defense than on the offense. So as I pointed out with this one here, I posted this back in February. This is the stuff we did. Well, Michael posted this on X. If you want to like stay up to date and see how these cycles roll out in real time, we go into this with more detail with TIA Premium members. As I said, there's links in the video description for this if you want to stay on board, if you've got a real estate portfolio and you are concerned with how this is going to play out for your portfolio. We've looked at this April 2023. 18 months ago, and we could see that the market was turning around. This was a time when there was still lots and lots of fears of recession. The banking crisis was still in full swing, and real estate prices were going up. You want to get into it at the bottom, and you want to get out somewhere around the top. Again, more detail on this with TIA Premium. It does go into a bit more specific details. Nonetheless, let's carry on with all these new all-time highs. So now we've got a feeling of what goes on here. The narratives are building, what we should and shouldn't do. What does it look like? How does it play out? Well, you can see it in the markets here, new all-time highs again. There are going to be corrections. We just had one in August, people freak out, and then the markets continue higher again. Basically, pulled back. I was very surprised that we even hit 50% and bounced away from that. I thought maybe we had a little bit more in this leg down. As you guys know, I talked about something similar to this. We've now pushed a little higher, and ideally you want to get a few weekly closes above here. Nonetheless, the S&P 500 is at new all-time highs. That has then dropped the VIX reading down as well. So the VIX has dropped back under 17. This is something that I put out a couple of years ago when I was watching a few other well-known analysts tell us how when the VIX goes down, that was a reason for it to collapse straight away. Completely wrong. It needs to stay in this zone, or what it typically does is remain in low volatility in this range for many, many months, sometimes even many, many years, as it has done throughout history. Low volatility is a sign of a bull market, and the bull market continues to climb higher. Now to the other world markets before I get back to the US and Bitcoin. Basically just looking at new all-time highs around the world with stronger economies. Remember, we're trading the chart, not the economy, not the news headlines. New all-time high prices in Germany. This is the German DAX. Now here's another interesting one that you can put onto your US charts and have a look at where there could be a correction, right? All I've done is just draw a basic trend line along the bottoms, and then you need multiple points, and this is a very, very long-term chart. I'm not doing short-term shit. This is decades, right? And then look at how the market has run up away from this line at a rough percentages before it gets a significant pullback. And these are significant for the time. And they can range between, I think some of them are around 40%, 60% is the 40s, to 80, 100, 160%. The main thing I'm talking about here, actually this one's not finished, that's 47% there. If we look back here, that was probably around 50-something% to the top. What I'm discussing here is how crazy the move to the upside can be, how far away it can reach from the trend line, from an average increase before you get a correction. And in these other cases here, it barely made it back to it got to the previous old all-time high. I don't think it made a new all-time high in 2007. This is the German DAX as an example. That was 160% from this trend line. Here is around 76%, 80%, 110%. Then the correction happens. So if we are looking at that now, in the case of this month, somewhere around an 80% move to the upside, let's start with 60. That would take the DAX out to about 20,700 points. 80% away from the trend line is about 23,000 points. 100% away from the trend line, 26,000 points. 120% this month or next month, around 28,000 points. That's absolutely ridiculous, I know. So if we did it several years from now, maybe it's going to, several months from now, more like 100% move from there, 28,000 points. So it could take some time before it gets there. Over to the NASDAQ. So new fresh highs here for the NASDAQ as well, lagging the S&P 500. Nonetheless, we are still seeing fresh prices once again. That's a reasonably good sign here that at least some of the tech stocks are going to come back. And when they do break to fresh highs, it's going to push the index faster and harder into those higher prices. And then I think all of these other narratives build upon each other and more narratives come through to tell us why these things are happening. But the way I say it is we don't need to know why those things are happening because that's too late. Right now, the charts are up. The macro cycle is still in play and you are getting higher lows, breakouts of higher highs on a longer term basis here, which is pretty much a recipe for higher and higher prices. The Dow Jones, new fresh all-time highs. It's at 42,000 points, can go a lot further from here. And now we get rid of these lines and you could do almost the same thing here. Look at your trend line and see how far the market can extend away from a trend line before you see a correction. Again, it's just a bit of a rough guide. I would definitely be following my longer term swing charts, and that is your TIA Gann swing indicator here. Okay, we've got to get to Bitcoin and cryptos as well. So I'm showing you the Home Builders ETF, all-time high. I know that didn't make too much sense. We're going to get to it. Really, this is just another new all-time high after another new all-time high. The market is seeing profits in home builders because they're still making money from building properties on the land. And essentially the money they're making is from the land values increasing. Goes back to the real estate cycle. Everyone is in a process of making money. And when I say everyone, I mean those that are in the know, that are trading in the markets, the market prices are going up. It doesn't mean the person down at the corner shop that's struggling to, I don't know, make ends meet. They're struggling, a lot of people are struggling to pay their bills. The difference between the haves and the have-nots is obviously growing. The point I'm looking at here is hopefully trying to help you out to get into the haves with this winner's curse phase, with prices going up. The have-nots are going to be down in the bottom. They're going to be doing the silly things and not getting into the market and being too bearish at the wrong times and then too bullish at the wrong times as well. The US dollar down again overnight. Essentially, this is part of the narrative. I think we're going to see further declines in the US dollar. This is really just an update here because I know I've spent a lot of time just tracking the charts of new all-time high prices around the globe. And gold, a quick update here because yesterday we saw this reject. Now, a new all-time high daily close. No breakout in terms of price to the upside, but in terms of gold, bit of a correction here and then has tried to push higher. So I think we'll continue to see higher gold prices over this last stage of the cycle. There will be corrections like there was in 2008. Here's 2008, there's March, bit of a correction down to October, and then you had that pretty big drive up. But that was a very significant correction for gold. I know there's a lot of gold bugs out there. A 34% move to the downside. It's basically like what Bitcoin has just done from March to August. So you still have to be careful. It's not the be all and end all to save where your money goes at the end. At the end, someone did ask, I would still consider some cash because if asset prices go down, your cash gets stronger for a brief period, which allows you to buy assets at a cheaper price. So here we are, Bitcoin and cryptos. Now I'm just looking at a quick look at the sentiment here. Alex put up a good post here, and I'm just looking for objective ways to find sentiment because we can see how sentiment has been at its lowest at each of those low points for cryptocurrency. Now we looked at it on the channel. That's July, that's the August low, and then we had a September higher low. And so what this has done is read the negative versus the positive comments at these low points and then mark them here on the chart. And you can see the extreme negativity at its lowest underneath this pink line at its lowest point was basically at those lows. So if you're buying underneath 58K, under 60K as I've talked about, it's been a very, very good buying opportunity, even though the rest of the world thinks that crypto was about to die out or Bitcoin was about to implode. Of course, there are no 100% guarantees. Like you can see back here at around $61,000, there was a low reading. However, the market did end up going lower and it took a long time. If you can couple this in with our 3-day down signal or some other signal to let you know, and obviously let us know that the market is going to be down for a longer period of time, it might have helped you stay out of some of the false readings on the chart. Otherwise, you just buy it up and hold for that period, because really 61K is not such a bad price considering where the market had gone and where it is now. You can see to the upside, extreme positivity, excess positive versus negative comments, perfect sell opportunity up here around $68,000, $69,000 back in July. Then the market dumped into that August low. So a nice little objective way to have a look at how the sentiment is faring across Bitcoin and cryptos. Another way I like to look at it is the Fear and Greed Index at 54 today, yesterday at 49. So we're still in this neutral territory. The market is climbing higher and the sentiment is climbing higher. And I've pointed out before, I think this has been a pretty good period to reset the market sentiment across the board. Lots of volatile swings like we saw back in 2019 when Bitcoin ran up to 14K and then dumped down to 6K before we move up to around 9 or 10, then COVID, and then the rest is history, right? So basically I'm looking at this period here for Bitcoin on that red line with this extreme volatility in the market sentiment. I think we've got that now, and that has confused a lot of people. So we're starting to climb our way out of those lows. Should we break $65,000, which is the next very critical point here for Bitcoin to get above, that would essentially swing us into an uptrend on the weekly chart. We've done that a couple of times before, where essentially back here it was an uncertain trend. You had higher highs and lower lows. We didn't have higher highs and higher lows. We did have a higher high and slightly higher low here, which was looking like a reasonable low until that happened. So it blew all out of the water. Nonetheless, when you look at price, underneath 60K has been a pretty damn good opportunity. And I think we'll look back on that in several months and think, why don't we buy up more at these lows? The reason is it seemed way too damn bearish to buy at this low here. This one, really, really important. September low. That happened just a couple of weeks ago, and everyone thought it was going to go back below 49K and potentially even take out 44K or even 38K. The $65,000 level is the next key target. This is going to be the overbalance in time and price. So above $65,500 means that this would be the longest in terms of time move to the upside and the largest price range to the upside in this entire downtrend move. That's why 65K is important. Doesn't necessarily have to close above that level. Closes above 61,400 now. That 50% level is going to be the next key support for Bitcoin to hold on to. Otherwise, I'd be looking back down around 56 to 58,000. All those closes here, plus the 50% of the 2024 range. This low here to that high, and that's the 50% right through the middle. So 56K has been a very important level. So what I'm saying is, you could see something like that. It could come back down and close here or anywhere above roughly around 56K, and we're still going to be in a good position moving forward. So what does that good position entail moving forward once we break out of this level? So that's what I'm saying. A good position, a breakout, what happens from there? I've looked at a few time frames, long-term frickin' time frames for the majority of people, swing bottom to swing tops. Sometimes there's a bit of a swing break in between, but nonetheless, basically that long run that Bitcoin could do from a consolidating pattern like this, if it breaks out to the upside. Low to high, 6 months. Previous move, 7 months. Shorter term here, 5 months. Swing bottom, 9 months to the final peak there. And then you had 7 months here and 4 months there. So we can look at 4 to 9 months. I think it might be somewhere around 4 to 7 months for this particular move. So if we take it from the low, 4 months, you're looking out to December, so Q4 of 2024. That could just be a little turn in the move. So maybe you're going to move up and then a correction, which then could keep pushing it higher. Or if we take it out 7-ish months, it's going to be March. So Q1 2025. That I still think is a very, very important period. Q4, Q1. If you've been building your positions over the last 6 months, I think this is when some of the payoff is going to come. I think there's still more payoff to come after that. But this could be a good area that you start to maybe go a little bit defensive just in case. Yes, there's going to be people say that it's going to go much further and you're crazy. I get it. Do you want to take some profits, or do you want to risk it all and hope that it goes on for another 12 months? You can do either, completely up to you. I just want you to win, and I want you to take something out of the market for your efforts of holding in through a massive emotional roller coaster, because you're probably going to have to pay for some psychology visits after this particular bull run. Speaking of which, ETH has done its absolute best to fuck with all of our heads because it is looking weak and strong, somewhat strong at the same time. Slightly higher low here, but it's still underneath $2,500. It's still underneath $2,900, and those are key levels on our 50% level. Major 50% here and those bottoms. So ETH is really doing its best to screw with us when it comes to showing any sort of signs of strength, while Bitcoin is showing some strength. Solana next. This is showing a little more strength here. Yesterday closed above the 50% for a second day, and that is $134. Hopefully on its way to closing above $160 and taking out these two swing tops. One at 64 and the other at 62. So that's the next key levels for Solana to show strength in this next phase and not just break down like ETH has done. And Sol BTC definitely is attempting to close back above any of these diagonal support lines. You can see here, just did it yesterday. Again, it needs to get back above 0.0024 for any sort of short-term signs of strength. I've got a couple more to have a look at here, and if you want, let me know in the comment section. I'll leave a pinned comment down below. Some other major altcoins that you want to have a look at. I'll probably start to add a few more alts into the videos moving forward, because I think this is part of where we're at in the cycle, this move to higher prices and these big explosive moves, right? Render has been putting in higher lows now for a month and a half, above 50%. That's one day, and then you can see these little higher lows, as I just said. So some early signs here. It hasn't broken past 50%. It hasn't changed weekly trends yet. That's a big thing to have a look at. You can look at Casper. That's much, much higher here on the price scale. Higher closes above 50%, which is a good sign. There's a few weekly swing top breaks here, but it might need a little more time to consolidate after it's had such a strong move with a very shallow pullback considering where it has come from. And one more for good measure, Sui has been in the news all the time. Super strong move here, breakouts of the swing tops. I posted about this to TIA Premium members as well as it was breaking these swing tops. A good solid move, correction here, and now it's gone and broken past the 50% level of that bear market that it had from March through to August. So a nice 6-month downtrend here. The weekly's got a few more days to go, so ideally strength would be closed above, weakness would be underneath. However, there are some strong signs of any sort of corrections that hold up would be great buying opportunities. So I'll leave it there. Links in the video description for TIA Premium and the free crypto and economic report. I hope you've got a ton of value from how this blow off top is coming through, what you can do about it, where maybe you can put your money, not financial advice. You need to make those decisions for yourself. I'm just trying to show the picture here around the broader traditional markets, the economy, and the real estate cycle, and how things might not be as bad as the bear porn fearmongers are making out for us. Thanks again for hanging out for another half-an-hour video. Congratulations to Eric for winning his fight last night. Absolutely fantastic fight. And I also got to hang out with Elliot Trades for the first time. Nice gym session yesterday. So thanks very much for the massive sesh there, mate. Hopefully catch up with you guys in the near future. Until then, take care and peace out. And I'll see you back in Australia at the next video. Cheers.